Welcome to Connective Home Loans TV. It's been a while since we've been in front of you. We're going to change the format a bit today, and you've probably seen from the run sheet that Brent Starenberg has joined us from Connective Asset Finance. So yes, we're going to cover Connective Home Loans today, but we're going to start more focusing on diversification and looking at ways of really making you as a broker in your business different from the other broker down the road or the broker with the other aggregator. So 2017 is about diversification, spreading your wings, beyond normal residential lending. And the one thing to do that is obviously you need some training or education in and around how to place that with your customer. So I think it's exciting. We'll be covering a few of those things. So it's not necessarily about product. It's about doing better things for your business, being more efficient, and creating more income for your business as well. So that's what it's all about. So Brent, what I might do is we'll kick off because I think we've got a little bit to cover with the Connective Home Loans piece. So we'll cover that. And by all means, if you've got some words of wisdom or a bit of gold, you can just chip in anyway.
Thank you very much.
So just catching up, Jess Fayano. Jess is our BDM in Victoria, but also number one BDM mate, but also ex-underwriting at Advantage. So a wealth of knowledge in relation to everything, applications, product, and everything to do with the white label product. So just a bit of an update. Some policy changes recently, and maybe a bit of a feel of what's happening in the market.
Yeah, so probably from a market side of things at the moment, we're really starting to see a lot of refinances, particularly investors coming into the market at the moment. It's a really strong market, so a lot of people are coming to us, and predominantly we've seen a lot of cash out for future investment and those other applications. And what I've found with a number of the brokers that have really utilised the product and utilised it well is it's really the structure of our accounts and the facilities that really make this an attractive proposition for your investors.
Yep.
And that particularly ties into when you're looking at the fully functioning redraw. And with our loans where you can have the multiple loan splits. Where it works well for your investors is naturally you're going to want to separate your investment and owner-occupied lending. Well, you do that with the second loan split, but where our account works really well is you can have the loan sit at a zero balance and the account actually doesn't close, which works really well because you've got a client who may not have found a property, they may be after $100,000 or $200,000 cash out for that next purchase, but you can actually have it sit in a separate split at a zero balance. It's not costing them anything to have it there.
Yep.
And then they're prepared for when they find that next investment purchase.
Yeah, obviously the interest-only rate is a little bit higher, but we've had a lot of brokers actually. If the serviceability is there, you're mad not to take your 80%. It's the rainy day account because it sits there. It's like a line of credit that doesn't cost you anything unless you draw it anyway. And the other advantage is you get paid up front on the whole balance, whether it's drawn or not. So yeah, win. So good for the upfront commissions. In relation to that investment lending, I think it was interesting, and Brent has also been at the first couple of the conferences, and we had a lenders panel there, and the consensus I think across all of the lenders was that come next year, with ASIC being in, looking at the benefits for customer versus broker, there's going to be a whole lot more focus on interest only, owner occupied, and the question will be why. So I think it's going to come back to a whole lot more P&I type lending. Just a reminder too, if you've got any questions, make sure you type them in as we go. We've got the screen here and we can come back to you on those. Valuation process.
Yeah, so the valuation process is a really important one where the valuations are completely free and upfront. And I think that's been one of the most important tools when we look at first touch formal approvals.
Yep.
And we really want brokers to actually order the valuation and have it there for when you submit the deal. Naturally, for pre-approval, the valuation won't be there. But it really helps us in assessing the deal because our focus is really pick it up once. We want to formally approve it the first time we pick it up. It's best experience for yourself and the customer. But also the valuation, having that up front, helps you tie into what's the property worth. You can lock in your LVRs and your loan amounts. And we've recently improved that process as well to now introduce the AVMs, desktops and curbsides. So the valuation process is nice, it's quick, it's simple and easy to use, but we haven't changed the portal. It's still through the same RP data portal that you've already been used to. So we've improved the process by adding more valuation types, but kept the simplicity of the way in which you order it. So that's a fantastic tool at the moment as well, which we're seeing.
I suppose the quickest way to yes, and it'd be same in asset finance, is the better quality deal that you put up, the better experience that you have as a broker, and also that customer looking in is going to be a better experience for them.
Absolutely.
So process is important. Putting it together right is important for a great experience for broker and also customer as well.
Definitely.
Brendan, in relation to your submission process, any sort of changes at this stage, or?
No, not really. I mean, I suppose the only thing is commercial is always an easier product to do anyway, as far as documentation and things like that. The biggest thing that I've always come back up against with our brokers is actually helping them understand that even though it's a consumer car loan, not a consumer mortgage, all the same documentation applies. So you still need to get your 3 months of bank statements, pay slips, and so on and so forth. So there is no shortcut on anything that is consumer, but yeah, there's no change to the documentation at this stage.
It's the old quality in, quality out.
That's it.
Yeah.
Just in relation to servicing calculators, and talking about some of the changes that are happening with Investor, etc.
Yeah.
What's on the horizon there, mate?
So there's going to be, like you mentioned, some policy changes. They will come out and be announced this week. So the official communications are just being finalised at the moment. There's a couple of changes in there, and the main change is the way in which we treat the OFI debt.
Okay.
So today, currently, for OFI debt, we've taken the actual repayment and used the 30% loading.
Yep.
Moving forward, it'll be from new deals that are submitted from this Friday.
Right.
We will be applying all 7.4 to all of that,
Yep.
that lending. So what you will find is the new serviceability calculator will also be updated to Mercury. And for those who have used it before, the second tab down the bottom is the Other Mortgages tab. When you open that up, it will now capture some more information on the client's existing mortgages that are remaining elsewhere. So the information that it's looking to capture is the loan term,
Yep.
the maturity date, and if the loan's interest only, the expiry of that interest only date.
Okay. I suppose the other thing too, so obviously come Friday, your maximum borrowing capacity is actually going to decrease. But also at the same time, whilst the floor rate is 7.4 on the assessment, there's an application in with ASIC at the moment to lower that floor rate. And if you didn't know, a lender's got to go to ASIC to have that approved, just like the living expenses, etc. So I think the floor rate that's been applied for and not approved yet is 7.25. Correct me if I'm wrong.
Yeah, that's correct. So we are looking to make future changes and future enhancements to that serviceability calculator. But what you'll find is when you use the serviceability calculator now, it's still doing all of that work for you.
Yep.
So it's a matter of plugging in the details. And what you'll notice is in that Other Mortgages page, it asks for either the maturity date or the actual date of expiry.
Yep.
You only need to complete one of those fields. So if it's interest only, it's either the interest only expiry date, which might be the 1st of December 2018,
Yep.
or how much longer is it? 3 years left on that interest only period.
Yeah.
So depending on what information the client has available to confirm those dates, it will actually dictate how you complete the calculator. So we've tried to make it as easy to use and user friendly as possible.
Yep.
And with that calculator as well, it's the same as with the change we recently made to the living expenses, where we do ask that you send us a copy of the front page of the living expenses and that Other Mortgages tab as well.
Yeah. I think probably over the next few months, you'll see the dust settling on basically what happened last November when you had to hold that 10% capital, and there's been a whole lot of change with not only investor loans but interest only loans as well. And I think with the changes that we've seen with the living expenses, lots of tweaks from lots of lenders in relation to their serviceability calculator, it's been a little bit of an unsettled time. But I think we're getting to the other end of that now, where we'll see some stability, consistent serviceability across most lenders, in the new year anyway. So good signs, it's just coming to grips with the changes.
Yeah, that's exactly right. And I mean, it is a different change to what you've been used to with our serviceability calculator, but it's still only going to affect a small number of clients who are right on that edge under the old serviceability proposition. But what I'd suggest is if you're not sure how to use the new calculator or fill it out, definitely contact your state-based BDMs or our scenarios team. Our scenarios team are right across all of these changes in details as well. So they're really there to help and support you with any questions or queries you've got. So really utilise that offering as well.
Okay, we do have a question now. I'll have to put my glasses on a minute. The print's a bit small, but we'll get back to that. Brent, let's kick over to you,
Yes.
And then I'll get Jess to have a look at that, and he can answer that a bit later. Mate,
I was going to say, do you want me to read it out?
Yeah.
I might have to borrow MG's glasses, I think.
I know, look, we've got a lot of viewers on today, and I think we've nearly got a record registration for today. It's probably just for you.
Oh,
because,
well.
yeah,
I seriously doubt that. They've seen you on CHL, mate. I'm pretty sure they'll know exactly what's going on.
Mate, look, a lot of people would be familiar with asset finance. A lot of people would be using, but for those that don't, just a quick top line, bit of background.
Yeah, absolutely. Well, for those that don't know, Connective Plant and Equipment is what we used to be known. So we've actually gone through a bit of a rebrand. We've changed our name to Connective Asset Finance. So we've had the offering available to all of our brokers for the last about 12 years, with a severe focus on that about 3 years ago, which is when I took over the role. And like I said, in the last 12 months, we've actually rebranded it to Connective Asset Finance. We felt that the plant and equipment was a bit loose, and Connective Assets Finance has a little bit more punch to it. Actually targets exactly what it is, which is obviously asset, be motor vehicle or equipment. And because of that, we've also seen significant growth in the last 3 years. In fact, I think we've increased about 230% in volumes and in number of deals being done by our brokers. So it's actually fantastic.
Yep.
Really good news story.
Okay, and sort of what options are available to the brokers under asset finance?
Yeah, absolutely. So there's probably a number of options. One is we've got a couple of different ways that you can go as a mortgage broker or even an asset finance broker. So we tailor it to all aspects of that market. We've got brokers that have got no experience at all, where we have a fully fledged processing team that actually talk them through the deal, do all the back end processing, walk them from start to finish through that entire process, and obviously do all the documentation for them as well. So basically like a full hand-holding scenario. We've also then got brokers that obviously want to do a little bit on their own, so they're sort of in between. They do some of the hand-holding, but also have the ability to work direct, and then we have brokers that actually do everything direct with the lenders, and we support them fully as well. So various different touch points for our brokers, but they've got access to a full gamut of our lenders, so all the majors are on there, plus some second and third tiers, but very, very healthy opportunity for a lot of our brokers in that space.
Yeah, look, I suppose Brent's business is the same as mine. As soon as we see an uptake, that's obviously brokers embracing one diversification into asset finance. And for Connective Home Loans, it's diverting from the norm and selling a retail product and selling something that is a good product, good rate, good for the customer. But our two businesses are also good for business as well.
Absolutely.
So, Brent has no control over the product or the rate or the underwriting at the end of the day.
None whatsoever.
Just like I have no control under the underwriting product or whatever. Both of our businesses are an extension of the connective services that you've got in your business and allow you to diversify into asset finance or allow you to have a brand that represents you rather than selling someone else's brand as well. Financial benefits of...
Look, this is a good point you bring up. The financial benefits is one major aspect of it.
Yep.
So financial benefits are that the cash flow is a lot different. In the mortgage space, you guys be aware. Obviously, you have to wait for settlement, and by the time that the aggregator gets paid versus the broker being paid, it could be a month to a month and a half based on when that settles. In the asset space, it pretty much happens as soon as it settles. So if you did a deal with one of our lenders on panel and it settled today, you'd get paid within the next couple of days. So from a cash flow perspective, much quicker.
Yep.
Financially, it's actually in the broker's hands. They dictate based on the amount of commission they want to make.
Yep.
They just simply increase that rate to generate the commission. So whilst we don't sort of dictate to them what they should be doing, it's entirely up to them. We can give them a range of what we see as an industry average, and it's up to them if they want to stay within that. At the end of the day, they've got to still remain competitive for themselves. But that's just the financial benefit.
Yep.
The benefit that we see for our brokers is actually an ongoing benefit. It's the fact that you're actually making those clients stickier to your business. If you're actually diversifying and doing asset finance or even the CHL product, Connective Home Loans product, you're making those clients more sticky to your business so that they're less likely to go off to another broker. And that's what I get annoyed or upset about, I should say, is when I see so many brokers that hand off their clients to another broker to do, whether it be a car deal, a piece of equipment or something else, just because they think that they don't have the expertise or they think it's too hard.
Yep.
When it actually isn't. It's actually very easy, especially if you have got that hand-holding proposition available to you. We'd rather see you keep that client and keep them with you to make sure that they come back to you again and again and again, and you become that one-stop financial position for that specific person.
Yeah, it's an interesting point, and you would have all heard it before. Is like, sticky customer is greater share of wallet, and greater share of wallet is one, the mortgage. But then the asset finance, and it doesn't stop there. I mean, it goes into life insurance, general insurance,
absolutely,
all of those other triggers from a mortgage that transactions come off. So if you're not having a holistic solution, there's someone else out there that is. So stickier customers, more transactions, and the other benefit of a sticky customer or an advocate for your business is that they refer more business to.
Spot on.
So it's just a snowball effect. Is the fact is not the mortgages. Look at a holistic approach. Bring in things like asset finance. Bring in things like a general insurance, or it may well be an outside referral that you've got in your business. But the more things that you can offer under your initial offer, the greater the greater chance is that you get more share.
Yeah, I think you're right. I think the days of a mortgage broker purely and simply doing mortgages is a thing of the past. So then, as we progress into a more technology-based environment that we are now, and with social media and everything else, more and more people expect that mortgage broker to be able to offer many more things. So yeah, having that diversification piece is definitely the way to go.
Yeah,
absolutely.
Just on that, Brent, we're going to do some workshops in the new year.
Yep.
And as you probably know, I've run some separate workshops for Connective Home Loans, and Brent has been out there on the hustings for probably
plenty of time, yeah.
Which I'm sure a lot of you have probably been along to them. But next year, what we're going to do is combine those into a workshop together, and we'll do a fair bit of work around a business plan and looking to generate referral sources for your business as well. So not just talking about the asset finance like we're doing today, but really talking about what we can do for your business, and maybe really sitting down and looking at the direction of your business over the next 2 or 3 years, and grabbing the pieces of the jigsaw puzzle that you need to make that end goal for you as well. So
absolutely,
that's exciting. Brent, some tips in relation to some of the brokers that have really embraced the asset finance. What's been the ingredients for the success? What are some of the key things?
Great question. Some of the stuff that I've seen, it's purely and simply is actually saying yes. So when you do get that inquiry that somebody's asking if you can do the car finance or the equipment finance, whatever it might be, they just simply say yes. That's the first hurdle.
Yep.
Once they've gotten over that, it makes life a lot easier. So say yes. Then it comes back down to your business practices. So as you said, what are the ones that we've seen success stories with? They're the brokers that actually look at the home loan application and go through their financial position and actually see that there's car payments coming out.
Yep.
So they go through their statements and actually plant the seed then as a starting point, but then also hit their database with ongoing advertisements or marketing templates that helps their clients understand that they do actually do asset finance. And I find that's the biggest thing, is that we're in the asset world, it's a much more emotional purchase. It can happen at the blink of an eye. You could see an ad on TV for a particular car, and you're sitting with your partner and you're like, oh wow, that looks really good. 2 weeks later, you could be driving past the dealership for that car and say, hey, there's that car, should we go in and have a look? And they go in and have a look. Next minute they're test driving it. Next minute they're getting the car valued. Next minute they're signing a contract. Then they're doing the finance. At no point in that process have they thought about the broker. And it's because the broker hasn't actually been active in actually talking to their client and making sure that they do understand that they do asset finance. Yep. So hitting their database on a regular basis is a really, really key ingredient in my opinion. And that's why we've worked closely with their marketing team to provide all our brokers with a series of templates that they can hit on a regular basis. All different, you don't want to hit them with the same message every single time, but at least helping them understand that there are things that they can help them out with, and not necessarily that all the deals that you see from car yards and the likes are always the best thing, because they're
Yep.
not always the best thing. There's usually tricks and smoke and mirrors, I should say.
Yeah, well, it's the templates have been a great success, and we've even had some of our BSMs execute a bulk email out to a broker's database.
Absolutely, yeah.
And within minutes, the phone started ringing. So there's been some great things. Yeah. Just on the back of that success, we're shortly going to introduce 3 templates that will generate inquiry on connective home loans as well. And that doesn't only promote connective home loans. The wording in that is about promoting your brokerage and the difference that you bring to the table by having something that's access to wholesale, that's unique, that's exclusive to you, and can only be accessed through you as well. So in driving engagement through these templates, and you don't need to be on My Marketing. It's something where you can grab your data and shoot that template out to all of the customers within your database. And it's another touch point for your customers. Makes them aware of what you can do in your business, and if at that right time they're looking at that type of transaction, they do themselves no much better than giving you a call about that.
Absolutely.
Jess, just in relation to things that might be, let's have a 2017 look. Let's look at the year ahead. What's on the horizon, mate?
So for Connective Essentials, what's really on the horizon is we want to really focus on improving what we do well.
Yep.
So, a lot of the feedback has been around, and where brokers have really, loved the experience, has been around the credit, the service, and the proposition we put around there. And one of the big things is at the moment in the marketplace, and we've seen a couple of lenders coming in and out, has been turnaround times. So turnaround times, we're sitting at 3 business days, and the majority of our deals are probably getting done within that.
Yep.
And a lot of people say that's great. We don't. We're actually want to be better. We want to improve more. So we've actually, in the last 2 months, actually brought on another group of credit assessors. So come next year, we're actually going to be bringing those turnaround times in and really making sure that that service and that experience is maintained at the optimal point.
Yep.
Because we never want to be satisfied where we're at. We always want to look to improve. And then the other piece of work that's going on internally at the moment to once again improve the experience is around our customer care team.
Yep.
So our customer care and our phone teams, they do a great job at the moment, and the majority of the feedback in there has been positive.
Yep.
But what we're actually doing is we're really breaking down our processes to, what do we do, why do we do it, and can we do things better? We're in a position now where, our business is growing, Connective Essentials is growing at quite a rapid rate, and we really want to make sure that the way we do things is the most efficient, the most effective. So, you as a broker and your customer will have the best experience possible. So we're really, at the moment, there's a big project going on looking at our post-settlement and really improving that side of things. And the feedback for the moment has actually been really good. But once again, we don't want to settle for really good. We want to always look to evolve and look to improve.
Yeah, there's always ways to do it better, that's for sure.
Absolutely. So the focus for us, and the brokers who know me, I've always sold and preached to where our product best is service. And we really believe in where the product's been successful has been the service.
Yep.
And we want to continue to improve that. So we don't just want good service, we want great service. And when we don't want great, we want fantastic. So it's really building on what we do well and really improving that even further to make sure that the experience to the brokers and the customer is what sets us apart from everyone else in the market.
Brent, 2017?
I've got to agree with Jess. It's actually something that, as a high level aspect, Connective Asset Finance, we're looking at all aspects of the business, and we're trying to build that service proposition as well. We really want to make the whole process for a broker from start to finish as easy as possible, but also as streamlined as possible and a pleasant experience as well. So, and it's not just for the broker, it's also for the consumer as well, or the client at the end of that transaction, because we understand that it's not just the broker that is our customer, but it's also the client at the end of that transaction who's trying to pick up that car or that piece of equipment. So there's a lot of stuff that we're working on there. As always, looking to add different lenders to the panel. Again, making that option for our brokers not necessarily limited to just what we've already got.
Yep.
Hopefully getting some ones outside of that. So yeah, there'll be a lot of things happening for Connective Asset Finance in the next 12 months, and growth is a massive part of that.
Yep.
I've got some big targets ahead of me, but that's okay. That's
So
all part and parcel. But the more brokers that we can get to understand the diversification piece, it just will work for them. And it's as you said that before, it's that holistic approach and making sure that we can actually offer everything that we can to our broker partners, so that they can do that to their clients. So yeah, big year ahead for us.
Yeah, I think in reflection, 2016 for us building Connective Home Loans and getting it up and running was initially about the broker's experience. And, obviously I think by engagement alone, I think we've been reasonably successful in, delivering, good service and good turnaround. But yeah, the one thing that we'd really like to concentrate on in 2017 is consumer experience. One of the great pieces there is in relation to the Smart Options product, which is funded by Macquarie and obviously part of Connective Home Loans, is we'll be leveraging off the digital platform that Macquarie have just launched into their retail space. It's got benefits for the broker's experience in that zip IDs, etc. So the whole process of or the time involved in taking an application will be reduced. And then from a consumer experience, obviously accessing a fantastic website with a whole lot more functionality and a whole lot more things that they can do. The other thing that brings to the table, and some of you may be aware, is that Macquarie have had a lag between a settlement and being able to establish offset accounts, where a lot of other lenders have been able to establish the offset prior to settlement, so you can put your excess funds in there and basically the settlement will go through. So that will come with the digital platform and also multiple offsets as well.
Wow. Okay,
so,
very good.
Yeah. Just before, and we've got a few questions there, so we'll run through those before we do finish. I think, just to put it in perspective, is you guys are on stage every day and your audience is your customers. So if you get on stage, what you want to do is have this fantastic performance that makes your audience remember you and want to come back for more of it. Products, BDMs, aggregators, we're your props, your set people, your production managers, your directors. We are providing things around you to make that performance perfect. Then it's a matter of your customers having that great experience of you just looking fantastic, professional presentation, slick, fast turnarounds, all of those things. So when you're thinking of on the stage, what you need to do is make sure that you surround yourself with good business partners that can deliver on the same aspirations that you have in your business. It's an important thing to remember. And in our workshops, we'll be starting to do that and talking about it. That may be internally, or it may well be that you involve other referral partners like solicitors or accountants or financial planners as part of your business plan as well. So
absolutely.
That's exciting.
It is.
And that's what we're looking at in 2017. All right, let's get to some of these questions. We might have to move that a bit closer, Brent.
Do you want me to move it closer?
Yeah.
I can answer mine first if you like.
Well, answer yours.
All right. So somebody's actually asked, who do we go to for personal loans? Obviously, this is not really an asset finance question, but I can actually answer that question for you. So probably the best avenue would be to go to, if you hold a ANZ residential accreditation, you can talk to your ANZ BDM and do personal loans through there. Secondly, if you aren't already, there is Latitude Financial Services, who also do personal loans. They're the two that I would recommend straight up. Alternatively, I think Citibank does, but I don't know whether you can do it through the third party channel. Otherwise, there is a group over in WA called Loans Today. They can do it, but they're really just an aggregator of personal loans, so you're going to actually add in that third step. So my first and foremost recommendations would be ANZ and Latitude.
Okay, yeah. So and the other thing too is when you go to the services tab on the left, there's a personal loan section.
Absolutely. Yeah.
So even within Mercury, it will give you there's Latitude, obviously ANZ, but there's some other personal loan lenders there. If you go over to the left-hand side, you've got residential lenders, commercial. There's also personal loans in there as well. Click on that; it'll give you a few options within Mercury. I think that there was a top one there that talked about, and I think it was when we were talking about the investment, the interest only, and some changes to the serviceability.
Yep.
And with regards to those dates for maturity, how is that going to be verified?
Okay, so the maturity date for the interest only, that's where providing the calculator is important, because we're actually going to take that interest only maturity date from the information provided in the calculator.
Yep.
So we're only asking that the client evidence the maturity date of the loan application,
Yep.
of that overall debt, not necessarily evidence the maturity date of the interest only period.
Okay.
So we'll base that on the information that's provided as opposed to asking for the verification on the interest only maturity, but we will need verification on the expiry date of the loan.
Okay. And the next one there from Angela was, are we referring to smart options at Macquarie or just essentials? Jess exclusively speaks essentials. He doesn't speak smart options. Basically, from the smart options perspective, it's pretty much the same serviceability. It's the same back end for what it is for the retail product as well. Few benefits, obviously, for those that don't know, with the smart options. Rate to borrow is cheaper. Annual fee is less than retail. It's $198 versus $398. And that smart options takes into niches that essentials doesn't, is things like line of credit, genuine 100% offset, SMSF lending, and there's also a parental guarantee product in there as well. So there's, when it's connective home loans, I think we have a very broad, we buy deep and wide. And obviously essentials at one end of that wide being great product, good sharp rates, fully transactional account, great for the mums and dads, great for the investors. And at the other end of the scale, it's the probably more sophisticated investor that wants that 100% offset, might even like the Macquarie brand. So when you think about connective home loans, just don't think about essentials. It's a broad buying base. And if it's at the smart options end, give the Macquarie smart options a go. If it's at the essentials end, give the essentials a go. So connective home loans is across two brands, but it does service a very wide range of customers as well.
I probably should cover off just one more thing on the personal loans, and sorry.
No.
The reason why I didn't mention it is because the person that actually asked the question needs to do it straight away, and this isn't going to help them straight away. But we do have another lender coming on board in the next month and a half, so it should be ready for 2017,
Yep.
and that is RateSetter. And RateSetter do personal loans, and they will probably be another option for them as well. But again, like I said, I didn't want to say that because this particular individual wants it straight away, and that won't be in place until such time. But they'll be a very, very good option. They're like a peer-to-peer lending type setup. So they'll do cars, personal loans, and the like. So that'll be really exciting for us. But like I said, it probably isn't going to help this particular person at this point in time.
Yeah, look, ideally, even in the asset finance space, it's having that broad solution base. Is that hopefully, if there is an asset finance or equipment or a personal loan within that suite, it's a one-stop shop that you can service it. We would hope that anyone in the residential space, whether it be an owner, occupier, investor or whatever, we can provide a one-stop solution at Connective Home Loans, whether it's essentials or smart options. So, the broader we buy, and when we talk about partnering with people that provide more solutions more often, that's what we're trying to build in Brent's business. That's what we're trying to build in my business or Connective Home Loans as well. So it's making you the star on stage, and giving a great performance and a great presentation and delivering the right things for your audience or your customers at the end of the day. Now, I think today's session's been really good, and it's informative, and please, it's all right for us to say that, but you need to give us your feedback as well. As I mentioned earlier, we will be following this format and integrating the program as really a diversification program. So in the meantime, between now and the next broadcast that we will put up on for you to register, any feedback would be great. Any particular topics that you would like us to cover, we're here to deliver on what you want as the audience anyway. Now, we usually do this during the middle of the program, but we have what we call fastest finger first. Now, the people that have been here before realise that you've got to have your mobile phone handy. So if you haven't got it, just grab it now. Now, I'm going to give you a phone number, and the first one to dial through will get a $50 Myer voucher. So here we go. It's 0475 977 456. So fastest finger first, and we've got the phone here. Hey, here we go. Do you want to answer that, mate? We've got Dom Ordino. So good on you, Dom.
Well done, Dom.
Good morning, gents.
Congratulations, mate. Fastest finger first.
Thank you. Been trying for ages. Long time listener, first time caller.
Long time listener, first time caller. Well done, mate. We'll get that out to you. So thanks for watching and thanks for dialing in.
Thanks, Dom.
Will. Thanks, guys.
Cheers, Dom.
There we go, Dom Ordino from Victoria. Great supporter of asset finance and a good supporter of Connective Home Loans. So there, couldn't go to a more worthy cause. All right, so that's it for Connective Home Loans TV. Thanks, Brent. Thanks for your time.
Thank you. Thank you
thanks
for
for your input. Thanks, Jess.
Thanks, MJ.
And we'll see you next time. We'll probably be looking at next broadcast in January. See you then.
Thank you.
See you guys.